Welcome back. I'm Joseph Julius. I'm hoping you are well as we now kicking off with the accounting studies, starting from the introduction to accounting. Thank you. Welcome. If you have not subscribed to our channel, please subscribe and hit the notification bell, and we'll see you there. The field of accounting, that every entity aims at making best possible use of its scarce resources. The need for value for money has led to a paradigm shift in the accounting practices. Accounting needs the information concerning past, present, and future expected activities of the business concern for diverse purposes. Remember, this information from the accounting departments are required by different groups. For example, managers, investors, bankers, creditors, tax authorities, regulatory agencies, labor unions, and the general public. These groups tend to have invested interest in such kind of information. Accounting is a special information system that provides economic information to these groups of people. We have various branches of accounting, that is financial accounting, cost accounting, and managerial accounting. Remember that each of these kinds serve a different primary objective and provide different but of course interconnected information to different groups of users of accounting information. Let's have a look at each of them. Financial accounting. This has been defined by Chartered Institute of Management Accountants, CIMA, UK, that it is the analysis, classification, and recording of financial transactions and the ascertainment of how much transactions affect the performance and financial positions of a business. The Committee of Terminology of American Institute of Certified Public Accountants defined financial accounting in this manner, that is, they said it is the accounting here is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the results thereof. Remember, the primary concern of financial accounting is to record in a systematic way money transactions between an economic entity and a third party, such as suppliers, stock of customers, employees, name them, so that at the end of accounting year, results of the whole year is in terms of profit or loss can be measured, and financial positions of the closing dates can be judged. Remember, financial accounting provides information to both inside and external users. Remember, internal users or the inside users are the management. Outside users including those like shareholders, investors, creditors, bankers, government departments, trade unions, and even the general public. Remember, the main purpose for which it is needed by the external users is just to make decisions regarding their relationship with the organization. Remember, shareholders need this information to evaluate performance of directors elected by them. Investors need this information for making investment decisions. The same information is put to use by bankers for evaluating feasibility of advances Government agencies like taxation departments require this information for making assessments. Talk of trade unions use this information to verify the amount of bonus declared by the company management. We also remember those are the groups we are talking about that have some vested interest in the what's called the accounting informations. Financial accounting is limited for management, as this information does not assist management for internal planning and control. Just like any other activity, financial accounting have some limitations which can be summarized as below. First one here is finance. What we're talking about, financial accounts are not classified. That is, management needs cost information department, or process wise, or job wise, or product wise, so that responsibility of the individuals can be pinpointed and effective managerial control can be exercised. But financial accounts are not so classified to provide such information. Again, if you check keenly, with financial accounting, pricing becomes very difficult. It does not give any relevant assistance during pricing. Financial accounting measures total cost after it has been incurred during the accounting period. So many times management is required to submit competitive bids for contracts. In order to submit such a bid, price of the product is to be determined before it is manufactured and before the costs are incurred. In such a situation, financial accounting again fails to assist management. Again, we are moving well. Another limitation here is that it does not reveal relative profitability of product. If you can check in, financial accounting only measures the results of the whole business for a given period. While measuring the totals, it may be the case that although business is earning profits, but some of the products are losing money. So in this way, higher profit earning of some products are being offset by some unprofitable products. So financial accounts will keep the management in dark as to relative profitability of different products. We are talking about this lack of that control over cost. In order to exercise control over cost, first requirement is to establish cost budgets and standards. Then an efficient system of reporting is required to provide data of actual operations, so that wherever unfavorable deviations occur, an immediate corrective action can be taken. Then checking the very last limitation on my side here, remember the list is actually unlimited. You can even add as many as you can reach. We are talking about historical inventory nature. Emphasis of financial accounting is on recording transactions involving expenses and revenues only after they have occurred, then summarizing and reporting this information at the end of the accounting year in the form of profit and loss accounts, income statements, and balance sheets. The statements are general purpose. They are general purpose statements and are valuable for external users. Value of these statements for management as a managerial tool is limited because of effective management need not only to know historical cost but also the anticipated cost. Moving on, we are having cost accounting. Now remember, cost accounting is just concerned with the ascertainment of cost. CIMA, that is Chartered Institute of Managerial Accountants, defined cost accounting as the application of accounting and costing principles, methods, and techniques in the ascertainment of cost and the analysis of savings or stock or excesses as compared with previous experiences or with the standards. Where cost accounting has been defined as part of accounting which establishes budget and standard cost and actual cost of operations, processes, departments, or products, and the analysis of variances, profitability, or social use of funds. Remember, details on cost accounting will be in our next topic, and also we'll be able to check on some of the differences between financial accounting and cost accounting. We'll analyze that in detail in our next video. We'll also check on the relationship between cost accounting and financial accounting. Thanks for watching. Subscribe to our channel. Please subscribe to our channel, Liagel Show, and hit the notification bell to be notified every time we post a new video.